Hi, Josh Thomas, mortgage broker in Utah, coming at you. How are you? Just wanted to share with you something about down payments in a loan program that we have called Home Possible. Home Possible is a Freddie Mac product, which is just simply to say that Freddie Mac buys it from the banks. But Home Possible helps dispel a myth that is very prevalent. So since 2003 that I've been doing this, people have been asking me if they have to have 20% down. And I think that goes all the way back to like the 80s, to be honest with you. My whole career, we've been able to do 100% financing. But there's a big difference in the monthly payment between Home Possible and 100% financing. So I'm going to highlight Home Possible, which is 97% financing, only 3% down is required. And so let's go ahead and talk about that. And I'll jump into this right here. So Home Possible, number one, 3% down, like I mentioned. That's a great thing. Another thing, though, is that it allows you to have current loan limits or normal loan limits. So loan limits in Salt Lake County, as an example, are 546,000. They change frequently. But 546,000, we can go all the way up to 600,000. And this particular product lets you do that, where FHA is a very common first-time homebuyer program as well, with a smaller down payment. It's actually 3.5% down, FHA is, but it does not go to 546,000. And so this is a great product that lets you go a lot higher. You do have income restrictions with this. You can't make a too terribly large amount of money, but there's two other sister programs that we can kind of compare with in case you do go over those thresholds. This and many others we cover in every single pre-approval appointment. But so if this is on your mind, give us a call and we'll take care of you. So again, low down payments, 3% down. If we can find a Home Possible or a second mortgage, community second is what they're called, then we can offer those and allow those. But to be honest, those are hard to come by. County loan limits, I mentioned that, minimum 660 credit score. So FHA is more friendly to credit. And so if you have a lower credit score, FHA is still a great low down payment option. But if your score is 660, 680, 700, 710, something like that, it's probably going to be better if we go Home Possible or its counterpart, Home Ready from Fannie Mae. They are fixed rate mortgages. It is available both for purchases and for rate and term refinances as well. And then it is important to recognize that it is basically available on all property types: condos, townhomes, single family homes, PUDs, manufactured homes. On the 2 to 4 units, if you're going to owner occupy purchase a duplex or a fourplex, you do have to still put 15% down. And so that's what this is telling you. So anyway, great product. I use it a lot. It does have reduced monthly mortgage insurance, which is really good. It does have very flexible underwriting guidelines, which is really awesome too. One of the cool things I love about this product is that you can actually buy out the mortgage insurance, and the monthly payment feels a lot like putting 20% down. And we've used that a ton with a lot of our clients. And so if pre-approving, buying a house, moving, if that is on your mind, and down payment is your concern, reach out to me or share this video with somebody who is kind of in that boat. If you're a parent and you got younger kids in their 20s or even 30s who still don't own a home, share this with them aggressively. Help them to get on the phone with us, because it's a hard time to buy, but it is a great time to buy. I definitely encourage and doing my best to help all of the youth that I know to buy their first house as well. And so anyway, use this product. It's phenomenal, only 3% down, and we'll help you all the other details once we get together. Have a great day. Josh Thomas, mortgage broker.